So what a wonderful opening address from Jim Rickards. Next up, we have Bron Suchecki. He is the Senior Precious Metals Analyst for our sponsors of today, ABC Bullion. My thanks to ABC for supporting this event and allowing all of you to understand a little bit more about what's happening in the gold market. But today, Bron, you're going to be talking about gold, cryptos, and money. Over to you.
Thanks, Kerry. Thanks for having us. Yeah, and I just thought I'd put this on. Bitcoin's having a bit of a price run at the moment, and there's a little bit of price envy maybe from the gold buyers to the cryptos, and it's been vice versa. So I just thought it'd be interesting to talk about the two and go through them. So yeah, let's get into it. What's money? What's this plastic note that we carry in our pockets? You've probably seen, this sort of definition of the attributes that you need for money. I'm not sure that that's really probably valid. They're physical things, but I think this is probably more realistic as to what money is. Store of value, obviously, unit account, means of exchange. I'm sure everyone's seen this sort of chart before, but I think it's probably more important of all of them, if anything is the most, it's probably the store of value, which makes the most importance, I think, for something to be money and good money. If it doesn't hold its value over time, even short times or longer periods of time, then really doesn't matter. It's not really of any use. You need to be able to measure other items in money. So therefore that money needs to have a stability to it. Now, what is money? There's a lot of confusion around this topic. There's a lot of belief by the common person. If you ask them, they think that banks sort of lend out a deposit. You deposit money to a bank and then they lend it out. And then they talk about fractional reserve and multiplying up what the central banks are producing. But they don't really do that. Banks don't lend out a deposit. If that sounds a bit weird, just ask the Bank of England. And there's a couple of economists and professors that have talked on this. But the Bank of England, there's a link down there, had a very interesting presentation, a discussion of money. And here they're sort of having a before and after, the look at the commercial bank and a central bank before and after they made sort of a loan. And what you see is that they do create money out of thin air. So when a bank, someone comes in to borrow, they are creating a deposit out of thin air, and it is backed by the debt of the loan. So the person, say, classic case, someone's coming to want to borrow money to buy a house for a 30-year mortgage. That bank does create that money out of thin air, but it is backed by the debt. And I think debt, suppose, can maybe be considered a bad word, but in the end, that debt is really just a promise by that borrower to deliver future value. They're going to repay that by their hard work in the future. So it's really a productive IOU. That's what it should be. That's what debt should be. If you have a young person, a young couple that are trying to get a start in life, they're really pledging their future 30 years worth of work and productiveness to say, give me a loan. I want to buy a house that I can get out there, get some stability and start working, producing something useful for society. So debt is not bad. It has good debt should be productive and should be producing something. So banking, just to recap and go back a step, there really was never 100% gold reserve standard. We never had money that was fully 100% backed by gold. Gold was primarily used for interbank settlements between banks. Bankers' purpose of banking ultimately is to vet those IOUs by the people that want to borrow money. I come to a bank and say, I want to borrow money for my house. The bank's supposed to vet to say, is this person actually going to be able to repay this loan? Are they actually going to do the work, or are they going to renege on it? That's the point ultimately of banking. Another way I saw this talked about by someone from Financial Times is that banking in a way is like a platform upon which tokens, the money, for delayed exchange can be stored and protected. The bank issues tokens, paper money, basically saying, well, we've got someone in the future who's going to deliver value, who's going to produce something useful, and we're sort of vetting that, checking them and making sure that those persons will honour their obligation. And on that basis, and this might seem a bit controversial, but given I'm at a gold conference, but in that basis, gold and cryptocurrencies aren't really good money. And what do I mean by that? I mean that they don't yield. They don't yield, say, like you go and plant, an apple tree, it's going to yield many apples for many, many years in the future. Gold and cryptocurrencies are sterile in that sense. It's not really producing anything productive. It doesn't grow. And so you might say to me, well, then, what's the point of gold if you're saying it's bad? And the point of gold is when money goes bad. That's the point of gold. So what do I mean by that? Well, remember, we're saying money's backed by debt. So obviously, first question is, what happens if you have bad debts? Someone doesn't repay their loan. Banking also involves invariably what we call maturity transformation, which is really about borrowing short and lending long. So the bank deposits that the bank creates are short-term liabilities. You can come in and redeem them immediately, whereas they're creating a debt, which is a 30-year mortgage. So you've got short-term deposits backed by 30-year mortgages. There's obviously a time mismatch there. And so banking can get into trouble when it doesn't manage that time mismatch very well. You can have speculation. And what I mean by that is that the debt is not used, it's not backed by someone productively producing something. It's backed by pure speculation. Someone saying, I'm going to borrow this money, buy something, hope to sell it to someone else for higher, and that's how I'm repaying. And that is very Ponzi in nature. It relies on them finding the next sucker who's going to pay them more for that to be able to repay the loan. And that's obviously very unstable. And then obviously you can also have a banking system where they overissue these claims. So they're issuing more claims than the future productivity of the economy and people can actually support. And so when all these things happen, money can go bad. And so the question then is, how do you protect yourself in this situation? If you're looking at the banking system and you're saying it used to be, issuing money to people had to beg to a bank to prove that they were going to repay the loan. And now I feel a banking system, financial system has gone into a highly speculative Ponzi type nature. And I don't think that these assets that back the money in the bank are very stable. Then how do you protect yourself? So you might think, well, what if I go to cash? But cash is still a claim on the banking system. Okay, cash might have physically taken your physical notes out, but you're still ultimately a claim on the financial system. So the only way really you can get out of the financial system is you've got to exchange those claims for hard assets, for an actual real asset. And so what are the sort of classic hard assets, right? You can have land, real goods. I've got the tuna can here, but any physical real good, obviously gold. And now we've got cryptocurrencies trying to come in and say, yeah, we're one of those alternative assets that you can use to protect yourself. And it's the only way ultimately that the public can exert any control ultimately over the financial system. If you're not happy with how the banking system is operating, you don't feel it's stable, pulling out of it and buying hard assets is the only way really that you're able to vote and say, I don't like the current setup, I don't like what's happening. And that's ultimately what the gold price really reflects, is people's confidence or vote on the stability or their view about the financial system. And so it's really a vote on money soundness, ultimately. Real asset prices, gold particularly, is a real clear signal of that. So the question then is, which hard asset will win? Which is the one asset that you should get into? And to answer that question, I'm going to talk about this thing that comes from game theory, which is called a Schelling point or a focal point. An example of this concept is if I gave you this 4 squares and I said you have 2 people that can't communicate, you and your friend, I put you in separate rooms, I'm both going to give you this diagram, and if you both pick the same square, I'll give you both $100. If you pick a different square, you don't get, neither of you and your friend get any money. It doesn't take a rocket science to guess if you're sitting there in the room by yourself and thinking, what square is my friend going to pick? Well, obviously you're going to pick the red one because they're going to be thinking, what's the most obvious square to pick for us to both win the prize? You're both going to go, I'm pretty sure my friend's going to pick the red square because it's the one that stands out. It's the focal point. It's the most obvious thing. It's what everyone knows, or the other person knows the other person's most likely to think, that we're going to choose. And so the question is, why gold is the hard asset to win? And my answer to that is because in a financial crisis, what is it that everyone knows is the asset to go to, okay? everyone knows in a financial crisis, if you're worried about the financial system, you go to gold. Gold has that focal point, it has that history of being used for so many years, being valued for so many years, that people will naturally go, in a crisis, I'm going to flow in, the money is going to flow into gold. It's not to say that it won't flow into other hard assets. You know, certainly people will buy land and other hard goods, and money will flow into cryptos as well. But gold's the preeminent one. It has that 5,000 years with Tutankhamun's mask down there, that history of understanding by the average person that it is valuable. And I suppose ultimately as well, the other aspect of it is that it's just been hoarded for so many years. So the hoarding, that history, is what contributes to gold really being that sort of focal point that everyone runs to. And if you look at the total amount of gold in the world, 195,000 tonnes, these are the official figures from World Gold Council, but part of that jewellery figure there, 92 tonnes, it really is a lot of Indian and Asian buyers that are really buying it for investment. So the way that I sort of look at it is that you're probably talking a lot more investment demand for gold. All of those hoards of gold, most of it, a large proportion of it is investment. And indeed that central bank red's part of the pie, that's also investment, right? They're holding it for this exact same reason. It's their fallback position. So significant amount of gold being hoarded. So what's the end game? And everyone probably knows this Exeter's pyramid of assets. There isn't any crypto in there. And the reason for it is that crypto is still really young. Okay, it hasn't been around for that long. It hasn't been tested through a financial crisis. You know, it's really still quite young. I mean, we're only talking 12 years, 10 years, not even 10 years. And it was started at a financial crisis. It hasn't been through a full financial crisis. We haven't seen its behaviour, okay? We don't know how it really will perform when things start to compress down that pyramid. And what I would say is that in this thing about what's the focal point that people are going to think to, you've got to sort of think the baby boomer Gen X, their historical knowledge, their view is gold is that focal point, okay? That's what they understand. That's what they saw in the 1980s. That is their history and their understanding about what's valuable. And look, they've got the money at the moment, okay? They're in retirement phase for boomers. Gen Xers coming into retirement sort of phase. They have the money, they will run into gold. It's my argument that in the next sort of financial crisis, that you will have that money flow into gold. Now, certainly younger investors are a lot more sort of crypto aware, and there's no doubt that in a financial crisis, some of them may go into gold, some of them will probably flow into cryptos, but because they understand it and they think that it's going to have, that's their safety measure, okay? But I think if you're a younger investor, you've got to think, well, this game is not what I think personally is where the money's going to go. I think cryptos are better than gold. You've got to think, what is everyone else going to think? Where is the bulk of the money going to flow? And I'd argue, because baby boomers and Gen X understand gold and not really crypto literate, they are going to flow into gold. And if you're young, you'll flow some of your money into gold. You may want to put a bit into cryptos because it may be quite having a bit of a volatile run at that time. But you've got to think what the majority of people are going to do. But then again, what I would say in closing is maybe cryptos will be for the next global financial crisis because the baby boomers will have moved on. Gen X will probably be in retirement. Well, let's hope that the Gen Xers aren't around for the next financial crisis and we can have some period of calm. But it's possible then that if the younger investors now have grown up with cryptos and cryptos stabilize and they become a bit mature technology-wise and a bit more user-friendly, then yes, maybe they will be the next asset that will run in, and maybe there will be a passover from gold to cryptos, you know, by the time we have another financial crisis. And unfortunately, it looks like society will always have crises. We can never eliminate them. But I think at this point coming forward, you've got to look at where the bulk of the money is, what people, the major investors, what they're understanding of, and what their focal point, their reaction when they have a financial crisis, what are they going to run to? And I'd still argue at this point, it's still going to be running to gold. So that would be my case for gold. And I suppose where I'd say is really what you need to look at if you're trying to protect yourself. And that's it, Kerry.
Bron, that was a really good, because I did ask you, I said, look, I'm going to give you 15, give you 15 minutes to have a chat and to explain a few things. And that was great. My question to you is, we've just heard from Jim Rickards, who was talking about having a large portion in cash at the moment. So my first question is, what do you think about his commentary on having cash? Because obviously there's no, you talked in your presentation about the fact that gold doesn't give you a return, neither does cash. Why do you think Jim suggests that cash is a good thing and not, I mean, he did say to hold gold as well, but.
Yeah, look, I agree with him, because I think in a financial crisis, right, yes, gold, but remember, I had hard assets in there, land, right? There will be businesses that will come up for fire sale, okay? Obviously, so in a financial crisis, it's a real great opportunity to set yourself up to be able to buy companies, good companies, not ones that are going to go bankrupt because they've got too much debt. And that's what you have to look at, what companies have taken on too much debt. But there will be really solid companies that will become bargains. And so having cash gives you that optionality to be able to come in and pick those things up, which will be decade bargains. And you'll be sitting on those things going, wow, that was the best investment I ever made. You're having gold because you don't know, that thing's going to dip, right? The stock market's going to fall. You don't know where the bottom is. You might buy, you might say, wow, that share on Woolies or Coles, for example, is a great buy. It's a grocery that's never going to go out of business. You pick that up, it may well fall another 20 or 30%. Gold gives you that protection in that situation. So you still want to have some gold, but having cash will give you that optionality to pick up those assets at bargain prices and set yourself up going forward.
Okay, I get that, but do you think we're really truly going to have a financial crisis? Because right now, money is being printed 24/7. Governments are handing out stimulus checks left, right, and centre. Here in Australia, got Job Seeker, Job Keeper, Job Maker. That to me sounds like we're going to have more of the funny money going into stocks, pushing the stock prices up and pushing everything else up alongside it. So why do you see that we may have a financial crisis? And we have 2 minutes left, so let's make this a quick one.
Look, I think it's been going on a lot longer than what I expected, right, from the financial crisis. And I think it just takes a long time for the average person to really understand about what's backing the money. And understanding that those claims we just talked about, you're talking about overissuance of claims, that money tokens, they're overissuing that against our productiveness. Okay, there aren't as many people in the economy. The productiveness is not there. It will have a reckoning at some point. I don't know the timing, but that's why you hold gold, because it's that insurance policy just in case. And yeah, so, I mean, look, I don't know, but I can't see it going on forever. There will be a reckoning.
There is a day of reckoning coming. Now, Bron, I'd be remiss if I was not to say, how can people follow you on Twitter? You're the Senior Precious Metals Analyst for ABC Bullion. How can people follow your work and what you do?
Yeah, no, you just go to abcbullion.com and at ABC Bullion is the handles to follow.
Okay, and my final question to you is, how's business at ABC Bullion? Is there still a lot of interest in gold as you close?
Yeah, no, there still is quite a bit of interest. It's eased off a little, but we're seeing still elevated levels.
Elevated levels in the gold. Thank you very much, Bron Suchecki from ABC Bullion. Thanks for joining us today. And we will see you later today in the Zoom networking meeting. Ladies and gentlemen, if you want to ask Bron any questions from 5:30 to 6:30 today, jump into the Zoom networking room. Bron will join us there. You can ask your questions. For now, thanks for joining us, Bron.
Thanks.